Well, as far as tax changes go in last night's budget, a lot of the announcements were already foreshadowed in the last few months. However, there's still quite a number of important announcements last night that need to be considered for WMS clients. A very important change announced last night and foreshadowed in the last few weeks is the change to the thin capitalisation rules. These only apply to foreigners investing in Australia, and to get a full tax deduction for your interest, you've previously had an allowable debt to equity ratio of 3 to 1, so that is $3 of debt for every $1 of equity in the investment. Last night they announced that from 1 July 2014 that debt equity ratio was reduced to 1.5 to 1, so essentially it's a fairly large change that foreigners investing in Australia now have to have more equity in their investments to get a full tax deduction from 1 July 2014. Offsetting the decrease in the allowable debt to equity ratio is an increase in the de minimis level of interest deductions that a foreigner can claim before the thin capitalisation rules apply. Traditionally that's been about $250,000 per annum of interest deductions. That will increase to $2 million per annum from 1 July 2014, which means quite a lot of foreign investors will be excluded from the thin capitalisation regime. A further change announced last night that affects non-residents owning property in Australia is the introduction from 1 July 2016 of a 10% non-final withholding tax whenever a non-resident disposes of Australian property that is subject to capital gains tax. The reason this has been brought in is apparently that some non-residents are not paying their fair share of capital gains tax. So we're yet to see how the rules work, but it would appear that whenever a non-resident disposes of Australian property, that someone is going to be required to withhold 10% of the gross proceeds and remit that off to the tax office, and the non-residents then forced to file a tax return and claim that credit back when they file their return for that relevant year. Impacting a lot of our clients was an announcement a month or two ago, which was confirmed in the budget last night, that from 1 July 2014 the government's going to impose an annual cap on the amount that a person can claim as self-education expenses, and that cap is only $2,000 per annum. That has caused a lot of problems with our client base who are required to spend money to keep up to date and keep their skills relevant, going to conferences, etc. around the world and around Australia. $2,000 is a very low limit. So we're yet to see the detail on that, and there may be opportunities where you can go to conferences and it doesn't fall within the cap, but we basically have to wait and see for the detail on that one. But it is quite concerning for a lot of our clients who are required to spend money on keeping their skills up to date. One of the less popular announcements last night that's not overly relevant immediately is the phasing out of the net medical expense offset from 2019. That's an offset individual taxpayers can claim when they've got a lot of medical expenses in their life, and in 2019 that's being phased out. So that hasn't gone down real well, but it's quite a few years off, and it's yet to be seen whether that will actually be introduced. Last night in the budget they extended the requirement for taxpayers who are paying pay-as-you-go instalments to be from quarterly to monthly, and from 1 July 2017 they've brought the limit down, so any business who's got a turnover over $20 million per annum will be required to start paying their pay-as-you-go instalments on a monthly basis as opposed to a quarterly basis. This will have a fairly major impact for some businesses, but it's still 4 or 5 years off yet, so we're yet to see how that will play out. Sort of an overarching theme out of the tax office's role in the budget last night was more compliance driven. They've been empowered to set up a task force to investigate the use of trust by wealthy taxpayers in avoiding tax. And also they've been empowered to look at the way international companies take profits from Australia and don't pay their fair share of tax. Look, we're not concerned about that at all, because obviously we pay our legal requirement of tax through our clients who have trusts, but there'll be an increased concentration by the ATO on the use of trusts in the coming years, which is consistent with the last few years, the way they've been dealing with trust law. As with any budget, a lot of these announcements last night are not legislation, and it'll be some time before they become legislation. And we're also faced with an election in September and possible change of government. And if that happens, there's likely to be a mini budget according to the political experts. So we may have some further changes or adjustments to what was announced last night. So we'll keep you posted as the year progresses. But in the meantime, if you have any queries in relation to anything that was announced in last night's budget, please feel free to contact WMS.